Hi, hello traders and investors. Welcome back to the channel. This is Candlestick Pattern Learning Series Part 2. Candlesticks, the language of market. In our previous video, we understood how candlesticks represents market psychology, how buyers and sellers fight inside every single candle. Today we are continuing the same journey. In this video, I will explain 6 more important candlestick patterns, not just by name, but by understanding what the market is trying to tell us. Remember one thing, candlesticks don't predict the market, they reveal the mindset of traders. So before we jump into the patterns, let's understand one important concept. Every candle has a story. The open shows confidence, the close shows control, the wick shows rejection and acceptance. So let's jump into the pattern. So the first pattern is bearish engulfing pattern. You can see in the chart. Three black cross bearish candlestick pattern forms when a small bullish candle is followed by a large bearish candle. You can see in this graph there is a uptrend. There is a small green candle here, and there is a one bullish bearish candle that completely engulfs the previous green candle. Indicates that sellers have taken control and the share price might continue to fall. You can see after this pattern formation, three black bearish engulfing pattern. Share price continues to fall. Next is bearish belt hold pattern. You see in the graph. A bearish belt hold pattern is visible when there is an uptrend in the market. You can see there is a uptrend. A single long red candle. This is also like a engulfing candle, bearish engulfing candle that opens at the high of the day and closes near the low with little to no upper shadow. You can see it completely is engulfing. There is no shadow itself. Indicates strong selling pressure from that price, which results in an ascending market. You can see that after that, stock price is falling. Let's go to three black cross pattern. When three consecutive long red candles, you can see here one, two, three. In earlier previous video, we have seen three white soldiers. That is a bullish pattern. You can see in my previous video. Here, it same three black cross pattern, but here it is in a bearish. This is a bearish pattern. Long red candles with small wicks are visible. Three black cross pattern is formed. Indicates pattern suggests a continuation of downtrend. This is a pattern of downtrend showing strong and steady selling pressure. You can see how this and then it is continuous. Hanging man pattern. Now, a few beginners will think that what is that inverted hammer we have seen in same image it is here like hanging man pattern. That hammer forms in the bullish scenario and this hanging man pattern forms in the bearish scenario. So you should know that is the language, that is the psychology behind of the candle. You should know where this formation is happening. If this is happening in the uh, reversal of the market from downside, that is part of bullish, that candle shows bullish. If this is forming in the top of the market, top of the stock price, where there is a resistance, then it is a bearish pattern. So you should be very clear, and without this, without the knowledge of this candle, if you don't able to read the candle, then you will have a huge loss in the market. You will never make a profit in the market. So please understand where this formation is because both look similar, both are looking same. Because some people will, the new beginners, especially for beginners, they won't understand. Formation is very important. Where this candle is getting formed, that is very important. So bearish hanging man pattern appears at the top of the uptrend. If this is breaking at the top of the uptrend and there is a bearish engulfing, see everything is coming here. There is a pattern at the uptrend, there is an engulfing, and then if you get there is a selling pressure and increase, then uptrend might be coming to an end. So this there is a consolidation, then it will turn for fall from here. So this is a hanging man pattern. So whenever there is an uptrend going on and the top, if you find this pattern is forming and there is a bearish LLP, then it is a that uptrend might be coming to an end, and then maybe it goes to a consolidation and then it will break or it will go up. But that confirmation we have to wait for. We can't take a decision, but for now it be this is a bearish pattern. So this is the hanging man pattern formation of the uptrend, which shows a bearish signal. Upside gap to cross pattern. Here, if you see upside gap to cross pattern indicates three candles. That is a long green candle followed by two small candles that create a gap up. So you can see there is a gap up. The second red candle closes below the first red candle. So whenever there is a gap up, there is a price difference, and market will always come to fill up that price. If you see here, if there is a gap up, maybe it go to three candles, but definitely it will come to the gap up, that median price, and it is reflecting here. So second red candle, if there is a gap up and there is a uh, candle formation, there is a bearish engulfing. Again, if you see this candle and this is big candle, and then if it is hitting the below red candles close, there is a potential reversal of brief consolidation. Downtrend continues. If you see this, and if it breaks, the downtrend continues. So this is the upside gap cross pattern. Bearish shooting star pattern. Now again, this pattern, if you have seen, we have seen in the bullish pattern, the previous video, that is an inverted hammer. Here is also again an inverted hammer, but now we are seeing bearish shooting star pattern. So the beginners, please understand, this is in the formation of uptrend. Bearish shooting is a single candlestick pattern with a small body, longer upper shadow, and little to no lower shadow. It appears at the top of an uptrend. Whenever there is a this formation is the top of the uptrend, there is chances that it will price will go down. So we have to wait for the confirmation. For this we can't jump. See, this is only a psychology. To see psychology of this candle shares that after the uptrend, now the seller see the wick. Sellers are pushing this price, and then we have to wait for the candle confirmation after the breakup of close of the you can take the weekly close or the previous candle entirely. If it hits the lower price of that, then we can either sell or we can took the option selling here. So that is another concept. So we'll come with that. We will stick here to the candlestick pattern. So the long upward shadow shows that buyers were in control earlier, but sellers took over and pushed the price down. So this is we are clear indicating. Anybody can see and tell, but you should know where is the formation and you have to get a confirmation, 2, 3 confirmation. But here we are only speaking on candles, so we'll stick to that only. So here is again indicating a potential reversal. So please understand, candlestick patterns are decision-making tools, not magical signals. So we need confirmation, 2, 3 confirmations. But moreover, you will come to understand, okay, this is the psychology, this is the language, this is the buyers and sellers controlled by this candle. So candlestick patterns are again, I am telling, decision-making tools, not magical signals. You say that once this formation, it will go up or it will go down. You can only understand the psychology of the candle and then you have to take the decision. So when we read candlestick pattern, we are actually reading fear, greed, hope, and panic. This only happens in the market. There is a fear, there is a greed, there is a fear of losing profits, or there is a fear that you will lose your entire money. There is a greed that you will make more money and money. There is a hope that market is down now, your stock price is come down, but it will go up in next 2 to 3 weeks or next session. That is a hope. And panic. When everybody is selling, you will be coming in panic. So this is the broader scenario happens in the market, and every investor trader is having this emotional feeling. So today we have covered 6 important candlestick patterns and more importantly the psychology behind them. This is a learning series, not a one-time video. Please go through this video. Please see this candlestick in the chart and see how after this formation of this candle, how the price behavior, what is the price action here. Price action is very important. Price action is everything. and we will go deep into price action also. There are more powerful patterns, but I don't want to rush them. In the next video, we'll continue the series and discuss the remaining candlestick pattern with the real market relevance. If this video helped to understand candles better, please like, share, and subscribe to support this learning journey. Comment below which pattern you found most useful. As is always, trade with discipline and patience. See you in the next video. Thank you.